This week's real estate and mortgage rate update. We had a kind of a big week. What was called the Big Beautiful Bill passed, and it's got some things in it that will help housing from an affordability standpoint and from a supply standpoint. I'll jump into those here shortly. Let's get into the numbers. So we're still hovering in the high sixes on 30-year fixed. This is national average as of today. FHA, we're in the low sixes. So, kind of hovering in that area that, again, very choppy and expected to be choppy. Tariff news is kind of back at the forefront because the pause is due to expire August 1st. Apparently, we're supposed to get some updates as to which countries have inked deals with the United States. But you can see, we were trending in the right direction here. And as a reminder, mortgage rates are based on this bond called a mortgage-backed security. Up and green is good for rates. Red and down is bad for rates. Each of these bars represents a day of trading. This was the day before the 4th of July. We were closed for the 4th of July. And then today. And we broke through this floor of support. So this is a little concerning because there is some room to drop down here into these areas of support. So, we could see this drift a little bit lower, maybe before. This was a tough one to break through up here. So, once we get above this consistently, hopefully the trend will continue. And then, wanted to touch on median home prices by state. This is as of May of 2025. Oregon, and this is for the whole state of Oregon. Last week, I looked more specifically at Clackamas County, which I believe was 626 and some change. So for the state of Oregon, 524.9. We're not the most expensive state. We're certainly not the least expensive state. We're number 11 out of 50. Number 1 is DC. So you look at this tiny little speck over here. You can barely get it on the map, and it's $1 million, over $1 million median home price. And then you get into Hawaii, California. I was surprised by Montana, actually. I know those values have consistently gone up over the last handful of years. Nevada and Utah were not giant, Utah and Colorado weren't giant surprises. In fact, Colorado, these are just crazy. Number 5, most expensive in the nation. So now speaking about the Big Beautiful Bill, a couple things. $750,000 mortgage interest deduction is now made permanent. And then the SALT, which is for the taxes like property tax, local, state and local taxes that that are deductible. When this was originally passed in 2017, it was capped at $10,000. That has now moved up to $40,000, and it's going to have some inflation incremental adjustments year over year until I believe 2030 when it rolls back. And then there's the mortgage insurance has been restored as a deductible expense. That does phase out at certain household incomes. But this is all going to help with affordability. And then Trump accounts. These are savings accounts to help your kids prepare to buy a home down the road. From a supply standpoint, there are builder tax incentives that are pretty broad and should help from an inventory standpoint as builders start to create more inventory. And then there's some zoning incentives. I think particularly for the state of Oregon, we've always been kind of constricted by zoning. And so any incentives in that area will certainly help on the supply side of things. Nothing really in the bill outside of a significant amount of deregulation that would help mortgage rates. However, as we continue to see, potential softening in the job market, if we continue to see inflation come down, then we should continue to see mortgage rates, as mentioned, move in the right direction here. So stay tuned for next week's, and we'll talk to you then.